Welcome to the video on cash flows. The cash flow statement is often seen as a cumbersome or complex part of the financial report preparation process. The software automates the preparation of the cash flow statement. It is possible to utilize the mapping from your report or to simply enter the balances into a formatted table that allows for additional flexibility. This short video will demonstrate the two methods available in the software for preparing a cash flow. The first method being the manual method, and the second being the linked method. Here we see a report where we have completed the profit or loss and the balance sheet. From here, we will move to the cash flow statement. We click the Settings button and see that we are preparing a direct format cash flow and we are using the manual method. We move back to the statement and see that we have 3 blank tables for operating, investing, and financing activities. We may use the manual method where we have a cash flow that has been prepared outside the software, or where the format deviates significantly from statutory requirements. From here, it is possible to simply type descriptions and balances into the operating, investing, and financing tables to complete our cash flow statement. If we select Linked, we now utilize the software to calculate and allocate our cash flow movements. We move to the cash flow module to review and complete the calculations. We see that there is a Warnings tab which highlights any unresolved issues. Once resolved, the tab will switch from red to black. Beginning in the Statement tab, we can click on any balance to see an on-screen audit trail. For our first report, we manually enter the prior period balances. Click Save to save changes before leaving each screen. Next, we move to the Position tab. Here we see the details of our cash flows and the classifications across operating, investing, and financing activities. It is possible to reclassify entire balances via the reference column to the right, or portions of balances via the editable grey cells. The Adjustment screen can be used for cash and non-cash adjustments. For example, let's move a portion of our trade receivables, operating cash flows, to investing cash flows relating to security deposits. Moving back to the Position screen, we scroll down to the Non-Current Assets section and see blocks of editable cells. Here we see our unreconciled balance, and so we manually enter the movements across our non-current asset categories until the unreconciled balance is cleared. We then move to the Equity section and again clear any unreconciled balance by allocating to the relevant equity items. We will move to the Income tab, where again we are able to reclassify between operating, investing, and financing. For example, if $2 million of other revenue relates to gains from intangibles, we enter this below. We see that it is allocated to investing cash flows and operating cash flows are reduced. Within the module, there are also options for reclassifying borrowings and grossing up GST. The reconciliation for the note disclosure is derived and shown in the Reconciliation tab. There is an on-screen audit trail which can also be exported to Excel. Here we see our fully referenced cash flow statement. We then move into our movements and allocations, and finally the breakdown for each of our referenced balances. Now let's move back to our cash flow statement. We see that the linked balances now reflect those in the cash flow module. Here we see our fully reconciled receipts from customers and payments to suppliers. We see our adjustment to proceeds from intangibles and our cash balance with a note reference to the cash and cash equivalents note. It is possible to switch between the linked and manual methods at any time, and all data will be retained. View the other videos in the user guide and on the Accuri website to see what else you can do.